You got the payroll print right in the middle of the range, and that's probably the most confusing outcome for equity markets. Is it low enough for the Fed to cut? Is it high enough to believe the economy is still resilient? And if I'm an equity investor, how do I kind of respond to that? Unemployment rate about flat, so you didn't get a signal there either. So I think equities are probably going to take their cue from the rates market at this point. And you guys were looking at the WARP before, and how much cut is priced into there. The equities are probably going to take a pretty big signal from, because I think the data today was just not as informative as it could have been.
So on your desk at the Citi trading desk at 490 Greenwich Avenue, downtown Manhattan, what are they saying? Are you guys taking positions? Are you taking risk for your clients, or maybe just waiting to get more data, to get more conviction one way or the other?
I think this week has largely been a sit on your hands type of week and wait for the data to come out. And I think that applies to the banks, and I think that applies to clients as well. You had a sell-off on Monday. Maybe in a typical week, you might have had a little bit of a buy the dip mentality, but I think a lot of folks said, how can I add risk ahead of this event?
In your experience, if you get an Andrew Hollenhorst market, where Citigroup's been out front saying there's going to be a rapidity to the rate cuts, the corporate world's assuaged by that. I mean, corporations adjust given a new lower rate regime, right?
Yeah, I think corporates would like it in terms of balance sheet management, refinancing, things of that nature.
Yeah.
Equity markets will not like it. I think if you have to cut 50 because growth is slowing that rapidly, equity markets are not going to get enough support from rates initially.